What's up, everyone? It's Dre Trades, and today we're gonna do a little different video. We're gonna look at a stock, and I'm just gonna really look at the technicals, but we're gonna add a little fundamentals. Now, I need you fundamental guys, you fundamentalists, to get in the comments below and tell me why I shouldn't buy this stock or why anyone shouldn't buy this stock, because that's not really my thing, all right? But what is my thing is just looking at some of the technical analysis to see if this thing is gonna go up, can it make me money, or is it gonna go down? So I'm looking at this, Altria, Philip Morris, right, who changed their name some time ago to Altria, still kind of kept the symbol MO for, I guess, Morris? I don't know. But so I'm looking at this thing and I pulled up the FinViz, all right, the financial visualization website, one of my favorite websites. And the first thing, and the reason why I'm looking at it, okay, the dividend. The dividend pays 8.99%, a 9% dividend. So that got my eyes like, whew, all right, you know, I mean, 9% is juicy. Philip Morris, what? Anyway, so I'm like, okay, let's check this company out. Is this something I want to buy? And I look at the chart. I'm like, what the hell happened? What the hell is going on in September? I thought this is not a tech stock, you know. So I'm looking at it, and I'm thinking, okay, it's Philip Morris buying opportunity, you know. So I'm looking a little bit at the fundamentals. Okay, right, market cap 7.1 billion, income minus 879 million. You lost damn near $1 billion. Huh? You know, so the sales, you know, and then I look at the payout ratio. Let's see if they can afford this dividend. And for some reason, the payout dividend is cut. All right, so I'm like, it's cut. Okay, we got to look into this. Anyway, so here is some of the institutions, right? The upgrades and the downgrades. And I'm looking at, for the most part, the price targets. Now, on July 8th, Barclays recently downgraded from overweight to equal weight and had a price target of 43. This now seems the Goldman is doing a neutral and at 35. I thought 43 was the low ball, but if you come up here, the stock's at 38. What? I mean, that's like, what is that, like 10% below the 43? But Goldman on April 1st said the price target is 35. Wow, how accurate are they? Because back in April 1st, well, okay, maybe they wasn't accurate because April 1st, they was actually below 35. So I'm looking at, let's pull up some of the fundamentals on the chart. Now, where is that ticker? First of all, I'm gonna look at this. Pull up a little news story. Okay, Altria Group reports lower revenue in the second quarter dividend, but declares dividend raise. All right, so that makes you just go, dividend raise? You know, I could read all of this to you. You know, the revenue declined 33.8%, you know, and they drew down, here, this is cool. Altria drew down its full $3 billion revolving credit in March and paid it back in the full by the end of June. Okay, while it's now has the credit available, it ended the quarter with $4.8 billion in cash. Now remember that number, $4.8 billion in cash, and has an estimate of $3 billion after taxes and dividends. So these guys paid off $3 billion in revolving debt. Remember, they have a lot of debt because we did look at the debt ratio, did we? Right here, 5.1 debt to equity. What? Anyway, but they paid off $3 billion in revolving credit, you know, so that's huge. And these guys decided to raise the dividend. Where's that at? Oh shoot, here it is. Altria also announced it was raising its dividend from 84 cents to 86 cents. Now that's huge. So let's go back to the chart. All right, I'm looking at this chart. We got the daily chart up, and the first thing I see as of right now, this is right at support. Now, notice that when this downcline started right there, notice that it went ex-dividend. As soon as it went ex-dividend, everybody just bailed. They took the money and ran? They bailed, right? And this is crazy. This is down 6% in 10 days, right? For a stock like Altria, dividend paying stock, that's huge. Now, let's back out of it. All right. There's something else. Okay, so we know it's right at support. So let's look at the other times that it was at support, which is here. I'm gonna raise. It's up 12% since it hit that line. Here, well, we'll count this. That's up 9% here, right? That's up 13%, and now we're hitting again. So can we get 10% out of the stock? Can we get 10, 12, 13%? Maybe we can hold on, but here's something I want you to look at, all right? I'm looking at the daily, and this is why it's so important to pull up all time frames. So we're gonna go skip the weekly, we're gonna go right to the monthly. And you go, what the F? What the hell is going on in Altria? Because the first thing I do is I see this thing is in a downtrend since 2017. All right, this thing's just been trending down. Look at those perfect steps of lower highs and lower lows. You cannot get any more perfect than this. And with this particular downdraft, if it doesn't, remember we said it's right at support when we look at the daily, but when you look at the monthly, it looks like it wants to come down to maybe here, maybe $30. And I'm just looking at the chart, right? So is it too early to get in? Generally, I would say we want to wait for something to change. And even looking at the monthly, but it's like, wow, it's at a good time. It's at support. But looking at the monthly, it's kind of not, right? So we want to see some change. We want to see these perfect lower highs and lower lows change to where we at least get a higher low, right? Then we're like, okay, something is happening here, or maybe even a higher high. Then we're like, wow. And then you'll feel like you got in late. But now, man, if you can get in right now with support, pull up that daily, and maybe catch that 10% bounce back that maybe I'm seeing that can happen here, you might catch 10% off the bottom and get that 9% juicy yield. All right, so I want you guys to tell me, you fundamental guys, what the hell? Why should I not put money into this stock knowing that it's in the, actually, I know it's in the downtrend? Because one of the first things I say is like, look, first thing you do is you want to pull up the graph, right? And you want to see, I could easily see where my money's going. It's going to go lower because it's been going lower for 4 years already. Why would that change? Okay, that's the inside of me is saying, hell no. But the other side of me is saying, okay, support on the daily, and then that 9% dividend, that's juicy. And they just raised it. If you look here, and it's true, right? Because look, they was paying 84 cents right here, 84 cents, 84 cents. They pay every quarter. Now they paid 86 cents, right? And then people bailed. They bailed. Anyway, so earnings is coming out October 30th. Maybe we catch a bounce right here. Here's another thing. Look at the volume right here. Look at this volume. And I don't know what happened this day, because this is after it paid the dividend. All right, look at that volume. Let me zoom in there. Look at that. Right? That is 22. Yeah, that's 22. No, that's the average. Hold on here. Yeah, that's 22.7 million shares. All right, so the average is 7 million shares. All right, so this is the daily. So now when you zoom out, look at the last time it traded like that, which was here, right? The Corona bottom. And then look, right? We got a beautiful bounce off of that, up 35%. Right, so that got me going, is it a kind of a washout or whatever? You know, so I don't know, but right, that kind of says maybe temporary bottom. So this could be a good time to get in, but I'm looking at it. It came up on my radar, and I want you fundamental guys to get in here and tell me why I shouldn't invest in it. Let me pull up financial. What is it? Yahoo Finance. Let's look at a couple of things here. I need to have that on a quick thing. Okay, let's go. We look Philip Morris. Let's go to the financials. See what we got here. Now, one thing we could look at is over here, right? I like looking at this. I like looking at the graphs, makes it nice and easy. We can see the annual revenue. Revenue is in green, and it's steady. It's steady revenue. And then we can see the blue is earnings. Why it's declining since, look, 2016, 2017 is when it went a little lower. And then if you go to the chart, right, if you go to the monthly, and you can say, oh, wow, that coincides at the top and it's going down. I don't know what's going on. I know what's actually going on. Now, I just had a vision E-cigarettes, right? That's when all the kids, and it was made a big deal, and it was trying to shut it down because these boys, if I remember, I'm going off memory, so don't quote me, that they bought some e-cig company, and then it just rolled. It was like the worst purchase any company could do, because the timing was just like, they bought it, then all of a sudden the government just started coming down on them hard because kids were smoking, it was getting crazy. So maybe that's what it has to do with. By the way, this is a sin stock. A lot of people are not into it. Sin, so, I know a lot of people don't like this stock just because of that. I should have actually put that disclaimer out in the beginning, but hey, man, it makes money. All right, so into each his own, right? We can all invest in whatever we want to invest in. All right, so the revenue is the same, earnings is declined, but if you pull up the quarterly, you can see kind of a bounce, like maybe the earnings are coming back. You know what I mean? So maybe that's why they raised the dividend. I don't know. That's the quarterly, right? So annuals, it's like, what the F is going on? Quarterly, right? So anyway, all right, it's just, I need you guys to kind of get in here and say, hey, what's going on? Let's pull up the balance sheet real quick, and we could see the assets. How much cash they said they had? We can come up here and go here, and it says they have $2 billion in cash. Okay, now this is 12/31/19. Okay, $2 billion in cash, and I think that report we looked up over here. What did it say? They have they drew down they ended the quarter with $4.8 billion in cash. So it looks like from that time they actually raising their cash. They paid off some debt. So maybe it's actually a good time to get it. Maybe the bottom starts here. We got the washout, and we had support. So that's that. Where's that? My emails. Where is the? Okay, and here the total debt. Now remember, this is the 12/31/19. All right, so it's a little old, and you look at that. Oh my gosh, that's $28 billion. I'm still looking at more, right? Yeah, damn. $28 billion. You come over here, right? 2016, 12/31/16. So basically, just basically 2017. We look at the debt. It was $13 billion. Then, right? Then what is that? The next year? Okay, still about the same. All right. Then all of a sudden, $25 billion. What the hell happened? And then $28 billion. Oh my God. All right. So we know now that they just paid $8 billion and off. $8 billion of it off, but it's going crazy. You could see now why this is going on. Okay, so I don't know exactly what's going on, exactly why they all of a sudden needed all that debt and all that, but like I said, support, they raised the dividend, they paid off debt, so maybe, just maybe this is a bottom and you can get that old Philip Morris type growth, even though people are getting off what they do. But here's something interesting. Let's go back to that report that I had up, and where this is kind of funny. Let me see. Okay, right here. It also has several on products under review at the FDA, right? On nicotine patches are made in partnership with Swiss company Helix Innovations. Helix expects a 43% increase in the amount of stores that will sell these products. All right, so by the way, this right here is a big growth in today's segment. So basically I'm saying they put you on the nicotine and then they charge you to basically put it on, right? They make money putting you off, and they're gonna make money putting you off of it. Make money putting you on it, make money putting you off of it. Okay, hey, you want to smoke some cigarettes? Give me $5. You get up. Hey, you want to get off of that? Hey, give me $5, maybe $10. Because I just say not $5, because them nicotine patches are expensive, right? So it actually costs you more to get off of it than getting on it. Oh man, I don't know. I just find that I didn't even know they was in the nicotine patch business, but it just seems weird that they get you on it and make money getting you on it and make money getting you off of it. This seems like a circle. Anyway, it says here the company presented an outlook of 4.21 billion to 4.3. I'm sorry, outlook of 4.2 to 4.38 adjusted EPS for the full year. Projected growth between 0 and 4%. and they raised the dividend. So I don't know. What do you think? Put it in the comments below. It's a little something different for a Sunday video. We talked a little fundamentals. I don't, like I said, it's usually not my thing, but I'll glance at them. But I looked at them, but I still don't know what's going on. I mean, okay. You know, I have to read, like, okay, you paid off debt, you know, are you raising the dividend? You know, that's how it comes to me and sticks in my head. But, you know, when I see you gaining all that debt, I want to know why. Now you got to start really digging into the SEC filings and see why they gained so much debt over the years. I ain't got time for that. I'm just going to look at this chart and look and just decide when it's going to turn around. When are you going to make that turn to maybe make another play to an all-time high, right? So that's what I'm looking at. You know, I'm hoping it gets up there. You know, everything's at the all-time high, and I'm looking down below to see some of the stuff that didn't participate in that crazy what is it? What's the word I'm looking for? Froth. That crazy froth with the tech stocks. You know what I mean? So here you can get paid a 9% dividend to jump in and wait. It's 9% a year. Basically throw $100 in there. You're gonna get $9 every year, and it appears to be safe. And I'm saying that not because the payout ratio, which I couldn't find, because they just raised the dividend. Man, to me that says a lot. That says a lot. How many companies out there raising dividends right about now? All right, so thanks for watching. Let me know what you think about this video. I'm sorry it's a little choppy, you know, but you know, I'm not usually a fundamental guy, but we'll look at them from time to time and tell me what you think about Altria. You willing to throw some money in there, or you will, you know, throw your money in there and this thing could still be doing that, right? Or just kind of wait patiently until this thing actually makes a turnaround, right? Turn around and make a higher high. To tell you the truth, where you really want to maybe get in at, if you're looking at the technicals, but you lose some of that yield, which is so juicy. Above that, man, if we can get above that 45, what is that, the 45, it says 44.78. Yeah, if we can get above $45, that could be a sign of a turn, because this is a perfect downtrend. If you want to pull up the word downtrend in the stock trading dictionary, this is the one. This is what a downtrend looks like right here, man. That's perfect. That's perfect. Lower lows and lower highs, right? It's a downtrend, okay? But that volume, that's a sign. That's a sign of the bottom. All right, so maybe that was the bottom. Look at that stick right there, right? And maybe this one will turn around and make an actual higher low. Then if we can get that higher high, that's a good buying point. All right, so I'm Dre. This is Dre Trades. Thanks for watching. Till tomorrow. I need you to like this video, by the way. Please like it. Why? Because I get no love on YouTube. So I need you to like this video and subscribe, man. And we have fun on this channel. Remember, I did my first live video with Zoom, which was very fun. I did it on Friday. I plan on doing it this Friday. So definitely hit the bell so you could be on next Friday and we could talk about this stock or whatever stock you want to talk about, or just anything, man. That's the kind of guy I am, man. Just get on here and shoot the shit. All right, thanks for watching. This is Dre Trades. I'm out.